Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to look at Fixed Asset Activity 5. The information provided was extracted from the financial records of yellow traders for the year ended 30 June 2021. If our accounting period ends 30 June 2021, it means it starts on the 1st of July 2020. So we're going to look at each question individually now, and you will notice that it's been asked in a different way than what we've been doing up to this point. Starting now with question 5.1, prepare the asset disposal account. If we look at the additional information, on 31 March 2021, all equipment was sold for $15,000 on credit. The accumulated depreciation on equipment sold was $117,000 on the 1st of July 2020, which is the beginning of the accounting period. Equipment is depreciated at 15% on cost. So what have they provided me with? They provided me with the selling price. We sold it on credit. And they provided me with the accumulated depreciation on the asset which I'm disposing of in the beginning of the accounting period. This means I need to calculate the cost. So if we now look at the 5 steps in asset disposal. Step number 1, update your depreciation. So if we sold it on 31 March 2021 and the accounting period starts on the 1st of July 2020, it means that we need to calculate our depreciation for 9 months. But now I cannot calculate it yet. Why? I need to find out what is the cost. So if we look at our tangible asset note, there were no additions. So it means that we just take the cost in the beginning minus the cost at the end, and that provides us with the cost on the asset which we disposed of, $150,000. Make sure that you show your calculations in brackets. Now that we've calculated the cost, we can calculate our depreciation. It must be calculated for 9 months. To show step number 3, we need to take the accumulated depreciation in the beginning plus our updated depreciation, and that equals the total accumulated depreciation. If you now look at that asset disposal account, hopefully you would notice that there is a big problem. And what is that? My accumulated depreciation can never exceed the cost, because that means that the carrying value will then be equal to a 0 or a negative amount, and we cannot have that. So when this happens, how do we calculate the depreciation? We need to get the carrying value in the beginning, and we're simply going to minus 1 from that, and that equals my depreciation. Why do we subtract 1 again? Because the carrying value at the end should be equal to 1. So now we can calculate our total accumulated depreciation, $129,999. Our next step, show the selling price. The selling price will always appear on the credit side. We sold it on credit, so my details is debtors control. The last step, calculate if you made a profit or loss on the sale of the asset, and to calculate that, we need to balance this account. If we sold it for more than the book value, it means that we made a profit. For less, it means we made a loss. Here, we've sold it for more than the book value. It means that we made a profit on the sale of the asset, which is $14,999. To calculate the missing amount, we are going to start with land and buildings with number 1 and number 2. But now we need to look at the additional information. A security office, cost price $400,000, was destroyed in a fire. Instead of repairing the old security office, The insurance claim and additional funds were used to build a new security office in a different place on the property. So, how do I approach this now? We start with number 2, because they told me a security office with a cost of 400,000 was destroyed in a fire. So we are going to show this as disposal at carrying value. Because now the calculation in number 1 becomes a lot easier. To calculate number 1, we can draw a T account. The cost in the beginning minus the disposal, which will then appear on the credit side, minus the cost at the end equals 700,000, which will be my additions. Take note, you do not need to start with question number 1. In this case, you actually needed to solve question number 2 first before you can solve the additions. If we look at vehicles, number 3, we need to calculate the accumulated depreciation. This is an easy mark to get. We simply take the cost minus the carrying value. Remember to show your calculations. That equals the accumulated depreciation. To calculate number 4, the depreciation for the year, you now need to look at the note. There's additions, there were no disposal, so this means we need to calculate depreciation on the new plus the remaining. So if we look at additional information, the new vehicle was purchased on credit on 31 October 2020. This is important information. Why? When we calculate depreciation on the new, it's from the day we purchase it until the end of the accounting period. So vehicles are depreciated at 20% on carrying value. So if my accounting period ends 30 June 2021, it starts on the 1st of July 2020. The new vehicle was purchased on 31 October 2020. This means we start counting from the 1st of November until 30 June, and that equals 8 months. So depreciation on the new is 300,000 times 20% times 8 divided by 12. Make sure that you show exactly what is the new, what is the remaining in this format. To get the old or the remaining, we're going to take the balance in the beginning. Remember, it is carrying value, so we need to use the carrying value in the beginning, 528,000, and times it by 20%. So my total depreciation is the new plus the old, 145,600. To solve number 5, the carrying value at the end, we're going to take the carrying value in the beginning plus and minus the movement. So what was my movement? We had an addition of 300,000 and we had the depreciation 145,600. Make sure that you use your answer calculated in number 4. This means that the carrying value at the end amounts to 682,400. Take note, you can also open up a T account. Just make sure that everything appears on the correct side of the account. Looking at the last one, we need to show the disposal, and it's always at carrying value. So from the asset disposal account, we can calculate the book value by taking the cost minus the total accumulated depreciation, and that equals 1. Thank you very much. I want to leave you with this quote. I can, I have to, and I will. I hope you have a wonderful day. Next, we're going to look at activity 6. Goodbye.